Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Oh, sorry about that. We've just turned the sound on now. Okay, can everyone see and hear me now? Not sure who turned off the microphone. All right, I just checked and saw that some of you were saying there was no sound, but now there is, right? Okay, so if you can hear me now, could you let me know? Can you hear the sound? Is there still no sound? On my end, I can see the audio sources working. Okay, that's great. So let's get back to answering the question. This is really important. First, let's look at their revenue. Their revenue is $57.1 billion, which is much higher than the expected $55.1 billion. And as for earnings, $1.30, which is also higher than the expected $1.22. Okay, so let's first talk about their financial guidance, because revenue and earnings are fixed numbers. We'll get into the details in a bit. Let's start by talking about their guidance. Regarding the revenue guidance, the guidance for the fourth quarter, well, what they announced is actually the guidance for the third quarter of fiscal year 2026, because every company defines their fiscal year differently. Their outlook for revenue through next January is for the fourth quarter of fiscal year 2026. Yes, the revenue guidance is $65 billion, while the market consensus estimate was $62 billion. Some people even predicted as high as $75 billion. But I think, honestly, for this earnings report, when it comes to the numbers, people didn't really care that much about whether the revenue hit the higher end of those forecasts. Why? Because what everyone mainly focused on was the midpoint and the guidance they provided. The difference, the higher end, is actually quite optimistic. A figure like $75 billion is really on the optimistic side. Hitting $75 billion would probably only be possible if China came in and started buying in huge quantities. So these numbers show that the market demand for NVIDIA's chips is really strong, which helps to ease concerns about an AI bubble. Also, it's important to note that regarding these revenue figures, there's a key point that Jensen Huang addressed during the press conference. He mentioned it during the earnings call. A reporter asked him, Sales in China were not included in their projections at all. This is the same approach AMD took. Everyone is being pretty conservative, so when they make forecasts, they don't factor in China. However, Jensen Huang did make a statement about this. He hopes to re-enter the Chinese market. This is something he keeps talking about. His reasoning is different from the traditional American, especially non-tech industry perspective, which is always about not selling advanced chips to China in order to suppress them. But Jensen Huang looks at it from an industry and competition standpoint. He says that if you don't participate in their growth, in the end, you'll lose the entire Chinese market. And there's also the risk that in the whole AI economy, your chips might no longer be the most cutting edge. That's basically his thinking. Now, let's take a closer look at this. As for his performance, let's look at the good part. his overall revenue grew 62% year over year, and quarter over quarter it was 22%. These numbers are actually extremely good. And then, as for the forecast, let's set that aside for now. The main point is the data center, because out of his total revenue of about $57.1 billion, around $51.1 billion comes from this, which is roughly 89%. That's nearly 90%. So its revenue is still higher than the overall revenue, which is 66%. That's pretty good. Then, if you look at the compute segment specifically, it grew by 56%. As for networking, that part saw a huge jump of 162%. The gaming segment grew by 30%. So overall, the revenue looks really strong. So Jensen Huang did mention a few key points. Let's just talk about the main ones, because his checking in. Can you all hear the audio okay? Is the sound coming through clearly for everyone? Can you hear the audio? Everyone, please wait. Can you hear me? Can someone reply to let me know? I'll wait for everyone for a moment. Okay, great. We have sound now. Sorry about that. For some reason, our settings seem to have changed, so the whole audio system wasn't working. All right, it's already more than 10 minutes in, so we'll need to pick up the pace a bit today and get into it. So let's talk about, basically, Jensen Huang's new products look really impressive. The GP3 version and Rubin are both on track and progressing as expected, which is very important. I think there are a few pieces of news from his side. There will be more coming out gradually, and I want to share some key points with everyone. The main thing, I think, is that Jensen Huang refuted the idea of an AI bubble. He said what he sees is a completely different situation. And then he said there are 3 platforms undergoing this transition. The first is the shift from CPU to GPU, which we've already seen happening. The second is starting from traditional machine learning. Now it's shifting to generative AI. For example, this is gradually changing the market and how everyone uses these systems. For instance, the ranking of search results and recommendation systems are both slowly being transformed. And then there's also, from this agent perspective, this is moving toward agent AI, which is an AI that can act as an agent to do certain tasks for you. So you can see that AI as a whole is continuously progressing. And that's basically what he's talking about this time. Also, we want to mention something else. Maybe add a few points that people might not usually think about in their daily lives. But he did mention that he specifically talked about the day before the financial report was released, having a strategy with Anthropic. Originally, this was a strategy involving the model that was in collaboration with AWS, which is Amazon. So it's a collaboration, and then he mentioned that they can work with AI and OpenAI, and also with AWS and Human, which is the sovereign AI from Saudi Arabia. They have a partnership there, and they also collaborate with xAI. Actually, this is what Jensen Huang said in English, and I basically just jotted it down here. He said, there's a strategy, right? Maybe everyone is a little suspicious, everyone is questioning whether they're doing cross-trading or some kind of strategic investment. But Jensen Huang's perspective is that, from his point of view, right now, at the early stage of AI, I want to have partnerships with all the best AI companies on the market, because that's the only way I can make sure that in the future, no matter who the winners are, whether it's 1 winner, 2 winners, 3 winners, or a lot of winners, almost all of those winners will be connected to me. That's his strategy. Is there no sound again? We see that the audio from the book, or rather the sound effects, are still good. Hey, let me pause here for a moment. If anyone is experiencing no sound, could you let me know? Please give me some feedback if you can hear me or not, okay? There's sound now. All right, sorry about that. Let's continue then. This is very important. I think today, since there are probably a lot of people here talking about answering questions, I want to add this point. Whether it's answering strategies or collaboration, if you look, he collaborates with a lot of people. His collaboration strategy is, as long as it's good, as long as he thinks it's an excellent AI model, he wants to collaborate with it. This is quite remarkable. Also, if we look at his AI factory, all these other collaborations are ongoing. In addition, he mentioned a few key points. He believes that right now, his supply and demand are balanced. Let me tell you, when he talks about supply and demand being balanced, he's only talking about himself. He's not referring to other companies. He mentioned a few key points. First, about GPUs being sold out. Hold on, maybe there will be more details on this later. He said that when he talks about being sold out, he means that almost all of his AI GPU models are in use. Also, what he means isn't that the inventory is immediately wiped out and there's nothing left, but rather that there are bookings. People have already reserved them, specifying how many they want and when. In other words, whatever he produces is shipped out right away. He also specifically mentioned that the supply chain is well planned. When I saw the reporter interviewing him, he made a point to say this. He talked about TSMC and also mentioned some companies in Taiwan, as well as memory manufacturers, like the 2 memory factories in South Korea and Micron in the US. He also talked about Taiwan's ODM companies and the system manufacturers. He mentioned all of them. They've been extremely helpful to him. So here he's really brought our entire supply chain into the picture. He also mentioned that the application is growing exponentially. There's a lot here. Additionally, he talked about how within the next 12 to 18 months, there will be no catching up expected. I've put a star next to this to explain it further in a moment. What he means is that starting from now, from the end of 2025 to the middle of 2027, in terms of AI chips, specifically the accelerator systems, meaning the GPU superchips and the full host station's total solution, they will maintain an overall leading advantage that no competitor will be able to narrow or surpass. This means that because what he's saying is that they won't be surpassed by AMD, nor by Intel, nor by China's Huawei. These are strong competitors, but they are able to maintain their technological edge. He's confident about this, and he mentioned a competitive advantage lasting about 12 to 18 months. At this point in the so-called tech industry, the degree of being ahead can be extremely significant, because being fast, if you're ahead by 12 to 18 months, you might just keep staying ahead, keep being faster. So these are some of the key points I picked up. Also, if you reason it out, the growth is exponential. So that's basically it. Then, during the earnings call, he mentioned a few bottlenecks, such as electricity and financing, memory and wafer foundries. He thinks these are controllable. As for foundry opportunities, first of all, look, he's been coming to Taiwan a lot. He's really focused on strengthening TSMC's lead in advanced process technology. I think there's no need to elaborate on that. I believe everyone already knows this. He really does look out for us Taiwanese people. I can only put it that way. Honestly, it's pretty heartwarming. Then, secondly, when it comes to memory, he also has a great relationship with Korea. Remember, he even went to Korea and had fried chicken with them. That's true. He's really good at building relationships. And then, in addition, as for electricity, he's been keeping a good handle on it. But when it comes to the power supply, there's not much he can do, since that's really up to the power companies. I think, up to now, all he can do is try his best to stay on top of things. You mentioned something about financing. I'm not sure if it was brought up here or not. He probably did mention something about financing. Hold on, let me check. Yeah, regarding financing, it's the AI companies or the people coming to the data center, the ones who want to build the data center, who need to consider financing options and how to structure the financing. In other words, what he's implying is that this isn't really his responsibility. He doesn't handle this part. He means that it's up to the clients to figure out how to come up with the money. Also, he mentioned something about ASICs. He said that their diversity, as well as the overall ecosystem, is a strength. He believes that AI ASICs don't have much of an impact on them. So in this earnings call, he really emphasized their advantages and their leading position. All right, so a few conclusions. Two main takeaways are that he's very optimistic about the overall outlook, and he has helped ease concerns about an AI bubble. Also, the overall demand is actually very strong. In addition, he mentioned something about large data center operators or owners, or that they will continue to invest in new equipment, because he mentioned that AI has already started generating returns. Now, this is probably very important for us. He did say this, but just because he said it doesn't mean you have to believe it. So what should you do? You need to look at the financial reports of these large data center operators. All right, this is more important. So what we really need to look at next is what? We need to look at the financial disclosures of these CSPs or companies that specialize in data centers. When their financial reports come out, we need to see if their revenue and profits are actually there and whether there are any issues with their cash flow. So this is something you all need to do your homework on and keep track of, okay? And then, in addition to that, I've listed two things here, a table above and some text below. Let's address the text first. Their financial reports are released after the market closes, which helps stabilize the overall market sentiment. So looking at today, aside from the Hong Kong stocks being relatively weak, most Asian stocks on Thursday went up. Korea, Taiwan, and Japan were all pretty much reacting to this. This is a pretty positive message, so let me talk about it. Everyone, take a look. During regular trading hours, aside from NVIDIA, among the remaining 6 or 7 tech giants, including Qualcomm, let's take a look. Both time periods saw gains, and the ones with the biggest increases were Google and Qualcomm. Okay, Qualcomm, oh, sorry, it looks like I didn't include Broadcom here. I might have missed it. Sorry about that. I'll probably need to add it in tomorrow. So right now, it only shows Qualcomm and not Broadcom. My apologies, my apologies. So since Broadcom is actually down while Qualcomm is doing pretty well. Now, let's also take a look at a couple of the weaker ones. Facebook and Microsoft are relatively weak. This is the part I want everyone to pay attention to later when I talk about being selective. This is where you need to be picky, because some of them are still going to be squeezed. NVIDIA's performance is excellent, but who are NVIDIA's customers? The ones placing orders with NVIDIA are Facebook and Microsoft, so the pressure's on their side. Also, if we look at regular trading hours, who else is relatively weak? AMD and Micron. For Micron, it might be an issue with memory pricing. AMD is easier to explain. It's because, well, the top player got stronger again, so the second place got sold off again. However, the second place actually performed well in after-hours trading. Also, we've recently seen that. Recently, we've listed companies that are more closely related to NVIDIA. For example, Intel, Oracle, and TSMC. Since ADRs were mentioned, we especially want to thank TSMC. All right, and then his so-called favorite son, which is what they call it. Let's talk about Wi-Fi. We saw that its performance wasn't great during regular trading hours, but it did really well after hours. So we can see that it actually has a pretty significant driving effect and helps stabilize confidence. But I want to remind everyone to keep being selective. Why is that? He managed to stabilize everyone's mood, but maybe only about 60 or 70%. There are still issues in the market that need to be addressed. The first one, we call it hard is fat, soft is thin. The hardware is the fat part. For example, this refers to chips. They're the fat ones. So you might see ASICs or other things like AMD or DRAM. They're considered fat. But the problem is, the financial status of cloud service providers and data center operators still needs to be clarified. For this, we might have to wait until, well, the soonest would be Oracle's financial report on December 9th. If it's slower, we might have to wait until the first quarter of next year. That means we won't be able to see it until late January or February next year. As for Microsoft, Facebook, AWS, that is the so-called 4 or 5 major CSPs, their capital expenditures will reveal the state of their cloud businesses. Also, there's the issue of fat upstream, thin downstream. So while AI chips and infrastructure are doing well, the downstream side depends on the situation. For example, recently we've seen that DRAM has started to get inquiries because of HBM. There's an effect. Demand is really strong, so double data rate 5 prices are going up, and double data rate 5 is also driving up double data rate 4 prices. But it's already reached a point where, for example, smartphone manufacturers, PC vendors, or desktop and laptop makers are almost unable to handle these price increases anymore. So the downstream side is still relatively thin, while the upstream is fatter. Basically, upstream makes more profit and downstream less. When I say big, fat, small, thin, I don't mean stock prices. For example, yesterday I saw some small companies like Co-Wi-Fi already performing well, and SMCI seems to be doing better too. But I'm not just talking about stock price performance. That's only one aspect. What I mean is, I'm talking about the situation with revenue and business operations. What I see is that the smaller AI companies are still relatively weak, and my view is actually echoed by others. You'll see more about that as we go on. There are also some additional positive factors. For example, this is important. NVIDIA and the company X.AI, founded by Musk, well, actually, it's not NVIDIA and Musk together, but rather NVIDIA and Musk's X.AI. It was founded by Musk, so NVIDIA and XAI did not make a joint announcement. They plan to build a data center in Saudi Arabia using 620,000 NVIDIA chips, and this will be constructed by Human, a company under Saudi Arabia's sovereign wealth fund. There's something very important I want to point out here. The number of US computer science graduates, their output, may start to peak and then gradually decline starting next year. But when there's a need to fill that gap, China might not be able to sell, and it's still uncertain whether they'll sell to you, so the Middle East becomes very important. Why? Because the royals in the Middle East are not only wealthy, but they're also willing to invest. So this is actually a very good opportunity. The target customers are good, so when we see some loosening of restrictions here, of course we pay attention. Trump, after all, comes from a business background, so naturally, when it comes to doing business, he's definitely more proactive. He won't be like, traditional establishment presidents tend to be more conservative, so that's why he said this. he approved 70,000 units. Of course, I saw that the total demand is 600,000 units. I think more approvals will come gradually in the future. So this is relatively good, but there are some specific conditions, which are listed here very simply. The reason for selling to you is that you're not allowed to buy Chinese chips, of course. They're also worried about Huawei chips being exported overseas. Another thing is, after I sell to you, you can't resell them to China. So there are some restrictions. But I think if the Saudi Crown Prince Salman, if he really intends to build a national sovereign AI data center, I believe he definitely wouldn't sell them. This would probably be more of a treaty-based thing, but I truly believe that in practice, he wouldn't sell them. Now, let's take another look. What other additional positive factors are there? For example, Trump has said that high tariffs on semiconductors might also be implemented. Here, he's saying, a new round of trade conflict between the US and China could be coming, but I think, hey, this might actually be more favorable for Taiwan. And just to add, Taiwan's foreign orders seem to have hit a new high again. AI is really strong right now. To be honest, though, I have to say, we do have some doubts about this AI craze. To some extent, even though our export orders are a bit behind, the fact that they're announced every month actually means the market still reacts pretty quickly. So everyone might want to keep an eye on this, as it does have a certain effect. And in addition to that, the Trump administration is still actively and consistently urging Congress to strongly oppose a bill that would potentially restrict or even prevent China from selling semiconductor chips. They have stated that they firmly believe. As for the opinions of industry players, they say that you can't afford to be absent from the Chinese market. If you are, you won't be able to participate, and in the end, you'll lose more than you gain. That's what they're trying to persuade. This is the Trump administration urging Congress, but that's just their appeal. Whether Congress will go along with it is another matter entirely. And then, as for Trump, an official from the Department of Energy should be the Secretary of Energy. He said there's another agreement to be signed. A plan called the Genesis mission? What's the main point of this? He said it's a relatively large-scale development. Of course, the Department of Energy and artificial intelligence are basically about electricity, right? He said this project is huge. It's basically the future AI arms race, kind of like the Manhattan Project. So what is the Manhattan Project? Let me explain. During World War II, the United States researched atomic energy, basically the nuclear bomb project, which was called the Manhattan Project. The space race, on the other hand, was a competition between the US and the Soviet Union. After the Soviet Union launched a satellite into space, the US was a bit shocked, but then quickly caught up and started the moon landing program. Basically, it was a demonstration of the project's ambition, which seemed pretty impressive. So what we're saying here is that there are still ongoing positive developments, good news, for major chip manufacturers. And there's one more thing. This is something I added at the end, because I only saw this news around 5 or 6 o'clock. That is to say, there's a company called Muddy Waters Capital. This company, like Hindenburg, is a firm that specializes in short selling. But its CEO, Carson Block, actually said in an interview that now is not the time to short large American tech stocks. Even though some people are worried there might be a bubble, huh? Alright, so this long-only institution is actually telling you they'd rather go long than short. So you have to remember, I think this already makes it pretty clear. When it comes to these large tech stocks, you'd rather go long than short, but you still need to be selective. You still need to be selective, you really do, because once the strong and weak have been separated, you have to keep the strong and let go of the weak. Especially if you don't hold many stocks and the ones you do have are starting to weaken, then you really need to think about it. It's really a matter of making choices. Another thing he mentioned is that if you short Nvidia or other big tech companies, your business won't last long. He also pointed out something important. There are some foreign AI trading companies, or fake AI companies. Those are the ones you should be shorting. That's his target, of course, since he's someone who specializes in short selling. So if we translate and adapt this to our own situation, it means that if we're still optimistic about the AI sector, when picking stocks, you should choose those with higher purity and better fundamentals. Don't go for the ones that are just hype or illusions. It seems like you should go for the ones that are really about to turn things around. We should probably explain this difference to everyone. This is what he's talking about, and it's something we can use as a reference. Also, he mentioned something else that's very important. He said, if we look at the S&P 500, He means that for funds that use the index as a benchmark, as long as there is net capital inflow, they have to buy NVIDIA. So no matter how high NVIDIA gets, there will always be money piling in. This is a natural situation in the market. He specifically pointed this out, saying that as long as the market is still in a bull run, you shouldn't be thinking about trying to short it. You'd rather stay on the sidelines or just watch, but don't go and take a contrarian position. That's basically what he's saying. Also, we really need to mention Muddy Waters. This is a very famous company that specializes in short selling. But everyone has already made this statement, so we should be aware that overall, the momentum seems to have clearly improved. However, I want to mention again that you still need to be selective. Why? Because the strong and the weak have already been differentiated. As I just mentioned, there are a few points. It's not necessarily the case that the top is weak and the bottom is strong, or that the big is fat and the small is thin. Maybe everyone should consider this direction when thinking about it. Also, there's another piece of news involving the U.S. Department of Defense and Saudi Arabia, because the Crown Prince signed quite a few agreements in the U.S. on the 18th and 19th. There might be something in there that the market hasn't noticed yet. The Department of Defense and this MP Materials, well, maybe not the only one, but basically the top dog in rare earths in the US, are going to partner with Saudi Arabia to set up a rare earth refining plant, a rare earth refinery. The main focus is to process both light and heavy rare earths from Saudi Arabia, with an emphasis on both types. Light rare earths are definitely for civilian use, so it's not really anything too scary or extraordinary. But if the Saudis actually provide the US with heavy rare earths, now that would be something. If that happens, the US will really heat up, and its arms race with China will get even more interesting. Alright, so we're just letting everyone know, this is a follow-up news story worth keeping an eye on. Also, there's another piece of news from the US stock market that I want to add. So, Meta's chief AI scientist is leaving. His name is Yann LeCun. Don't assume he's Chinese just because of his name. The name Yann LeCun might sound like a Chinese name, but actually, his surname is LeCun and his first name is Yann. Anyway, he's announced that he's leaving. But the thing I want to tell everyone is, this might have been something he had no choice but to do, because Yann LeCun is 60. That's right. And then I thought about the age gap here. He's a professor at New York University, basically part of the older academic generation, because Mark Zuckerberg, the CEO of Meta, just poached someone from Scale AI this June. The so-called AI genius, Alexander Wang Tao, went in to take on the new role as Meta's chief AI officer, and he's only 28 years old. There's a really big age gap here. I just want to say, honestly, don't underestimate the young. Especially with new things, young people really have a knack for making things happen. So when we look at his departure, I don't think it's necessarily that they really had to let him go. It's just that young people are coming in, and there are differences in direction. For example, Yan still wants an open source system, but the issue is, well, you know how harsh the competition is. Alright, so let's just say he really values business performance. Everyone gets what I mean, right? And then it's like, because Wang Tao's position is to close the system in order to make money, so you can probably tell that's the direction they're going to take. So for Meta, this isn't exactly immediate good news. It's more like the lesser of two evils. There have been people with brilliant achievements in the past, but if their age or other factors make them no longer suitable for the team, sometimes you just have to let them go. Alright, so we just wanted to report this to everyone. Don't think this news means Meta's done for. Also, let's quickly go over a few things from yesterday. Regarding the financial report, one of the major retailers, its performance has consistently been poor, so its stock dropped. Its earnings and revenue both missed expectations, and its financial forecast range was revised downward. As for the automaker, things aren't good there either. The outlook was also revised down. But what's more surprising is that Home Depot's financial report and forecast weren't great either. They mentioned that so-called big ticket sales, meaning large purchases, seem to have disappeared. But the problem is, on the other hand, its competitor, called Lowe's, its revenue actually beat expectations. Although its earnings were below expectations, after adjustments, the earnings were actually a bit higher than expected. So overall, it's still pretty good. The EPS is still quite good. The issue is that they are expecting an improvement in the home improvement sector, so their stock price went up by 4%. However, for home goods, Williams-Sonoma still didn't perform well. They kept emphasizing the impact of tariffs, and their stock dropped by 3.39%. Also, as for apparel, discount apparel retailers like TJ Maxx, well, since people are a bit strapped for cash, they aren't buying in-season or newer brands, but instead are going for discounted items. So TJ Maxx's financial report is relatively good, and also, they raised their profit target for the entire 2026 fiscal year, so the stock saw a slight increase. Also, as for internet companies, they released their financial reports, their fourth quarter earnings report. They released their fourth quarter financial report, and this quarter's results were a bit better than expected. But the problem is, their forecast for the first quarter of next year, the upcoming quarter, is not really satisfying the market, so after-hours trading has been affected. It dropped by 6.6%, and then trading was halted. In a moment, I'll check the pre-market situation, which isn't looking good. Also, Walmart is releasing its earnings report today. At the time I was preparing this, Walmart hadn't released it yet, but it seems like things are looking pretty good. We'll take a look at that in a bit. This could potentially influence today's market performance. Now, let me talk about today's market first. Because the earnings report was good, tech stocks are doing relatively well, which is driving up the NASDAQ and the Philadelphia Semiconductor Index. The S&P should also benefit the most from this. As for Nvidia, of course, and the Dow Jones is mainly composed of traditional industries, so it's important to keep an eye on how those perform. If Walmart does well today, then the US stock market should see a broadly positive performance overall. Let me add a bit more for everyone. Also, let's take a quick look at the market. Here, I want to remind everyone that we're focusing on the market right now, and for each country, we'll try our best to provide some information for you all. As for Nvidia, that's a reaction I'll talk about in a moment. For the Dow Jones, it will reflect what we're about to discuss regarding the Fed's interest rate cut expectations. Originally, the market opened with an optimistic atmosphere driven by Nvidia, and everything was going up. But the problem was, later on, well, I won't get too close to the details, when the Fed's meeting minutes were released in the afternoon, they showed that expectations for a rate cut had declined. Plus, there was an announcement from the US Department of Labor, so overall, the market gave back its earlier gains. The Dow Jones only had a slight increase of 0.1%, and the S&P was up just 0.38. You can see that both the Dow and the S&P actually left upper wicks on their charts. It's a bit unfortunate that, well, the volatility index actually dropped on Wednesday, but today, before the market opened on Thursday, we saw a big gap down. So there's a chance that this tense pressure might be easing. Okay, as for the single-day performance, Block went up 7.5%, and based on Nova, which is related to electricity, it rose 7.29%. Constellation Energy also went up 5.35%. There are also 4 other stocks that rose more than 4%. Overall, I think that's pretty good. As for Eversource, I believe they announced their financial report, so that's probably why it dropped more significantly. DoorDash was similar as well. ADM was also down, so not sure why it dropped nearly 4.6%. Now, looking at the equal weight index, it was a bit of a surprise. Yesterday, it slipped slightly, down 0.3%, which is relatively weak. It's pretty surprising because the overall sentiment yesterday should have been bullish. So what does this reflect? It means funds have once again flowed into the big tech stocks, while non-tech stocks are once again less favored. Also, the NASDAQ here was up 0.59, but similarly, there was an upper shadow on the candlestick. As for the Philadelphia Semiconductor Index, it also went up by 1.82%. The increase here is indeed quite significant, but the key point is that next, it needs to get back above the 50-day moving average. If it can stand above the 50-day moving average, then there's hope for a rebound. Also, Applied Materials performed quite well, and Broadcom also went up by 4.09%. Sorry, I might have remembered it wrong earlier. Broadcom actually went up. As for the weaker ones, it's just AMD and Micron. Only these 2 stocks were weak. Aside from those 2, the other 2 stocks also went down, so overall, the Philadelphia Semiconductor Index still performed relatively strongly. Among the Magnificent 7, only Meta, Facebook, and Microsoft went down, and their drops were both over 1%. It's just that, as I mentioned earlier, the Magnificent Seven index was affected by the lowered expectations for interest rate cuts, which acted like a fuse. The key issue for all the indexes today is to get back to a favorable position, to try to reclaim the moving averages. In addition, they need to recover the range of yesterday's upper shadow at least. That's the minimum goal. So that's actually pretty good. Still, let me remind everyone, as I just mentioned, the current market is mainly about responding and helping everyone calm their emotions. So when it comes to the correction, the downside space for the indexes may not be that significant anymore. The downward pressure has been greatly reduced. But the issue is that, will there be a V-shaped rebound? That's where I remain cautious and hesitant. Why? Because some cloud service providers still have unresolved issues regarding their capital expenditures. While some of the problems have been addressed, not all of them have been solved. For example, with cloud CSPs. The issue of excessive capital expenditure among cloud service providers is still there. Plus, with the recent news that the Fed might not cut interest rates in December, the market may need some time to fully digest this before we see any real improvement. In other words, in terms of timing, we might need to wait a bit longer. Additionally, all right, so let's move on to our second topic, which is about the Fed's stance. Regarding expectations for economic data, well, this part, the meeting minutes have been released. Many officials believe that keeping interest rates unchanged for the remainder of 2025 might be the right move. Now, this is very important because during the October meeting, when the report was released, the US government had already shut down. However, the October Consumer Price Index and the jobs report were still published because the CPI figures for October were released. Also, it's worth mentioning that several policymakers opposed another rate cut in December. Now, the key point here is that there are still a few others. Some officials pointed out that another rate cut in December might be appropriate, it could be suitable. Now, as we mentioned before, it's possible that this time there will be 3 dissenting votes, meaning that if there is no rate cut, there will be 3 people opposing. Specifically, Miram, Bowman, and Waller who want to cut rates according to Trump's wishes. If there is a rate cut, there might also be at least 3 people, at least 3 members from the regional committees who would oppose it. It seems that some of the more hawkish committee members and governors would likely oppose it as well. He also added, to supplement his original words, that there's a comparison between the many and the most or the majority. He believes that those opposing a rate cut are probably still in the minority. However, we should point out one thing. This time, there are still internal disagreements. As I just mentioned, in December, there were actually 2 voting members who Mester wanted to cut by 50 basis points, but the issue is that Smith from Kansas wanted to keep rates unchanged. So, in December, there were already 2 dissenting votes, 2 votes that were not in agreement. And then in October, sorry, I just mentioned October, at the October press conference, they also mentioned that a rate cut in December isn't necessarily a sure thing. It's not set in stone. Then, at the press conference after the meeting last week, most of the FOMC officials who spoke were more concerned about inflation. The only ones insisting on a rate cut were those same 3 officials. The 3 board members who are more pro-Trump still want to see more, and as for the other committee members, it's not so much hesitation as it is greater concern about inflation. At the same time, there's also the issue of a potential US federal government shutdown, which could lead to an inability to collect data, basically a data blackout. So this factor is still having an impact, and as a result, expectations for rate cuts and interest rates overall have really dropped sharply. Additionally, the meeting minutes mentioned something else. Almost all participants agreed that quantitative tightening should stop in December, and this is very important. Even though you might not feel it directly, stopping quantitative tightening is actually helpful for the overall US monetary market and the so-called bond market liquidity, especially for liquidity in the monetary market. So it looks like they will stop quantitative tightening here. In addition, there's another factor affecting expectations for interest rate cuts. Why did the gains narrow yesterday? Well, a major reason is that the U.S. Department of Labor announced that the October employment report will not be released and will instead be included in December. The reports that are scheduled to be released in December will also include those reports that were originally supposed to be published earlier in the year, but have now been postponed and rescheduled to November instead. Normally, the U.S. employment report is released and comes out on the very first Friday of each month. However, due to the recent government shutdown, the official release date for this important report has been pushed back and delayed to a later time. Well, what's a bit tricky is that the rescheduled date falls after the Federal Reserve meeting, so the Fed only has tonight's report to base its decision on. But the quality of this report's data is already being questioned, which makes things complicated. That's probably why, toward the end of yesterday's trading session, the market was partially reflecting the possibility that there might not be a rate cut, that is, a pause in rate cuts. And the reason for that is employment. The market's weakness is the reason for rate cuts in September and October, but right now there's a lack of data. I don't know whether things are actually good or bad, so how am I supposed to make a judgment? So this is a pretty bad situation. We've included a chart below to show you. Regarding the situation with rate cuts, you can see from the chart, the red bar shows that after September, it gradually starts to decline. Looking at it now, the market really does seem to expect that the probability of a rate cut, or rather the probability of no cut and rates staying the same, has actually already exceeded 50% in the non-watch tour area. So we have to mention that, of course, this could still change. As new economic data is released, things might shift. But the point is, based on the information we have so far, it seems likely that the Fed might actually pause a rate cut in December. But I want to tell everyone something else. If it really is confirmed that there won't be a rate cut, then by the time the market gets that confirmation, it will probably have already digested this issue before the Fed makes an official announcement. Let me just add something else for everyone to consider here. There's also the hope and expectation that people will actually use the standing repo facility, which is also known as the SRF, in order to increase overall liquidity in the financial system. But the problem is, this also involves some other issues. Let me quickly add a bit more. Sometimes people just aren't willing to use these things. The SRF is one example, and the discount window is another. Why is that? Because in the past, when people use these facilities, others would think that you didn't have enough funds or that you might be at risk of a run, and that's why you were using them. So even though there's a strong push for everyone to use these windows to increase liquidity, people still worry about the past associations with them. This stigma is just too severe, so people are unwilling to use it. That's the problem. But maybe the way to solve this problem is to come up with a new term or a new program to handle it, to properly address this liquidity issue. Now, some people might call this QE, but I think, to be more precise, this isn't really QE. It's more like targeted QE, targeted easing, meaning it's a loosening measure aimed at a specific period or category. All right, just wanted to add that for everyone. Also, Mirren spoke yesterday. What he said was he didn't talk about monetary policy yesterday. He said that when discussing the balance sheet, you also have to consider regulation. That was a bit unexpected, because every time he speaks, he usually calls for a 50 basis point rate cut. Also, yesterday, Trump, just as I was saying Trump seemed pretty quiet, he came back into the spotlight again. He started criticizing Powell again, saying that because of the rising construction costs for this building, he's being prosecuted. So let me add something here. Why is this important? If you try to prosecute him, I'm telling you, Powell will be even less likely to resign as a board member. He'll just stay there and go head to head with you. So I think Powell and Trump, if they really think it through, should just make a deal. Don't prosecute him, and then Powell might just step down directly, hand over the board seat, and let you take control. But I think if he keeps making these kinds of statements, Powell might go on the defensive and just refuse to step down, staying on the board to protect himself. Also, yesterday, Trump made another jab. He used Gio Belsent's words to address Belsent, but in reality, it was actually aimed at someone else. He was mocking Powell, saying that if Belsent can't help bring down interest rates, he'll fire the Treasury Secretary. But everyone should know the Treasury Secretary isn't necessarily fully responsible for this. Also, there were a few economic data points released yesterday. We'll just go over them quickly. Since interest rates are still high, the mortgage application and refinancing indexes have dropped, meaning the housing market is still pretty weak lately. As for the trade balance, because the tariffs have taken effect, the trade deficit has narrowed. And then the data update for September is still uncertain. Originally, some parts for October and November were also uncertain. Also, there's something important I want to add that just came to mind. The U.S. Department of Labor previously mentioned that they might combine the October and November employment reports and release them together. Also, there's a possibility that the Department of Labor might skip a release due to their own issues. This is very important. These are all official data points that are crucial for the job market, and the market is closely watching them. I wanted to highlight this for you. Now, moving on, if you look at the trade numbers, it's pretty obvious here. Once tariffs start being implemented, what happens is that imports decrease. So, of course, when imports decrease, the trade surplus, or rather the trade deficit, shrinks. But the thing is, hey, this isn't necessarily a good thing. If there's not enough supply, there could still be problems. So that's the trade part. Now, another important thing, some numbers are already scheduled to be released. Let me go over the schedule with everyone. First, you can check out the non-farm payroll numbers later today, then the jobless claims numbers, and retail sales figures are expected to be released around November 25th. The jobless claims numbers will be out on November 21st. Then the PPI, Producer Price Index, will be released on November 25th, along with business inventories, also on November 25th. Durable goods orders will come out on November 26th, and import and export prices will be released on December 3rd. These numbers will be announced one after another. Now, what's more important, sorry, I just mentioned this, but it's actually here. That is, the employment report for October was skipped and will be included within November. This is because there's a survey that needs to be conducted every month in October, but since it couldn't be done retroactively, they had no choice but to skip it. Also, the data for September and October will be released together, specifically on September 9th and October 9th. So everyone should be prepared to deal with a lot of reports, and you might notice a data gap at that time. Theoretically, this kind of missing data in reports is a statistical issue. In statistics, as more reports come in later, a smoothing method is usually used. They assume the mean value and fill it in, kind of like they simulate it by just filling in the missing data. So that's basically the method they'll use. All right, so in addition, let me list out some of the key economic data released today in the Forex market. First, jobless claims. Since today is Thursday, we can take a look at that in a bit. Then the non-farm payroll report. This was added in as a last-minute update. Also, later on, there will be some late releases, including the Regional Federal Reserve Branch manufacturing indices, specifically from Philadelphia and Dallas. These are the main updates for today. The leading indicators have been delayed. In addition, existing home sales and new housing starts, existing home sales will be released at 11 o'clock. Also, there are two items listed as December 20th and December 22nd. These are reports the Department of Labor is preparing to release, but the exact time hasn't been confirmed, just that they are expected to be released today. The new housing starts and building permits, as well as the goods trade balance, will be released together with wholesale and retail inventories and new home sales. Also, between October 21st and 22nd, the Treasury Department is set to announce the monthly fiscal budget deficit. This could also be delayed, it's still uncertain. So that's part of it. The troublesome part is that these releases might be updated gradually, so you might see them being filled in over time. For example, today, these might not have much impact on the market. Why? Because today the main focus is on the earnings reports, but by next week? Or after that, once all the major companies have released their earnings, some of these numbers might start to draw more attention from the market. So as we see these updates coming in gradually, that's something to keep in mind. Also, yesterday there was news that affected oil prices. The main thing was a report that the US is proposing a new peace plan to Ukraine, which involves ceding territory and disarmament in exchange for a ceasefire. Right now, it's still unclear whether this is being led by Trump or by his advisors. Alright, but this news came out yesterday, and why is it significant? Because oil prices reacted quite strongly, with the market thinking that Russian crude oil supplies might resume, so oil prices dropped more sharply yesterday. Also, we should mention, Europe had a pretty strong reaction to this yesterday. They're really taking this seriously and closely evaluating the situation. As a result, European defense industry stocks fell yesterday. But as for a ceasefire, we really hope that if it can happen, it truly happens. Ukraine has already sacrificed so much, and if the fighting continues, honestly, it's pretty troublesome, but I don't think there's any need to worry too much about European defense industry stocks. Even if there's a correction after a ceasefire, I still think there will be opportunities. Because even if the fighting stops, it could be seen as a victory for Russia, and European countries would feel even more pressure from Russia. So I actually don't think defense spending will go down. And then there's another piece of news. Trump said he wants to issue $2,000 tariff checks, right? Like a tax rebate check. And it seems like it's for low-income families, specifically those with an annual income under $100,000. But about this part, it looks like the Republican lawmakers aren't on board with this, and the White House wants to bypass them, but I don't think this will necessarily go through, mainly because, for example, the House Budget Committee, basically America's purse strings are controlled by the House, right? The appropriations committees are all there, and they decide. There are 12 appropriations committees. The committees are the ones who decide on the appropriations. So from their perspective, it's like, after all the effort, the deficit for the 2025 fiscal year is already lower than last year, and they don't want you to go and spend more, causing the deficit to increase again. That's something we should pay attention to. What's more important is that after the Epstein case, this is another significant voice coming out against Trump. Now, for Trump, this isn't exactly fatal, but the key point is, when it comes to implementing policies, he might have to do a lot more coordination with others. This could become one of the changes he has to make from now, at least, until the midterm elections next year. So looking at the markets, we see the US dollar is really strong, breaking above the 200-day moving average. If expectations for a rate cut become more pronounced, the dollar could stay strong in the short term. Also, looking at the 2-year yield here, yesterday it was pushed up, but today there's only a slight change. I think the increase in yields will be less than that of the dollar, and it's possible that expectations for a rate cut will weaken. This could cause a slight rebound. Now, moving on, let's take a look at the overall market performance. Today, we might need to move a bit faster. Sorry about that. So as you can see today, right, Walmart's earnings report was pretty good. Actually, when I took the screenshot earlier, you could see it was only about 0.5. The Dow was only up 0.5, and the S&P and NASDAQ minis were up around 1.2 and 1.5. You can see that. Over here, you can see that everything was more or less driven up. As we got closer to the main market open, the gains actually expanded, which is good news. This could mean that the issue with the correction space has been resolved. The key now is how long it will consolidate before a real upward trend resumes. Also, before the market opens, let's take a look at SMCI. This one was lifted up by NVIDIA. NVIDIA, did you see that? Before the market opened, it was up by more than 5.5 points, over 5%. So the index should really look great today. Solace, this one. As for chemical materials, maybe everyone can take another look at this. It might be because they participated in some kind of tech roadshow or something. Basically, there's some good news. Also, we see that Palantir has been driven up as well. And then Avago has also performed pretty well. Looking at the traditional WWMT, actually Walmart has also done well, and Google too. If you look at the earlier ones, most of them are probably companies you're familiar with. Oh, WDC, that's Western Digital, AMD, Oracle, and APP. APP is that mobile advertising company. Seagate is also going up. So actually, you can see that the gains today are quite significant. You can tell. Just now we looked at the index, and now looking at the component stocks, we can feel a bit more confident. Oh, sorry about that. Clicked the wrong thing. Okay, as for the declining stocks, OLB, that's L Brands. And then, did you see? This one has issues with its own financial report, so it's relatively weak. And TFC is a financial company. We can see that there aren't any others dropping more than 1%. Most are going up. So today is definitely a solid up day, pretty similar to how Asian stocks performed today. This is more of a rebound, so we still need to take a look. Let's check the financial numbers at the end. First, let's look at Walmart's earnings report. The actual reported revenue is $179.496 billion. Hey, I wasn't wrong. Listen carefully. It's $179.496 billion. That's the revenue for the first quarter. So is Walmart important or not? If you tell me it's not important, don't think that just because it's a retailer, it's not worth paying attention to. That's a mistake. It's very important. Its revenue and adjusted earnings are both quite good. Also, they mentioned that they've raised their full-year EPS forecast. And here's some gossip. They're planning to move from the NYSE to the NASDAQ for their listing. Not sure why, though. Maybe it's because they think the costs will be lower, and they want to join the NASDAQ, which has more tech stocks, and be part of a technology-driven strategic lineup. I want to point out that Walmart's entire information system is actually very advanced. Think about it. In one quarter, they do nearly $195 billion in business. How do they manage their inventory replenishment? It's all real time, so they don't have excess inventory. There won't be out-of-stock situations or supply shortages, and there also won't be excess inventory. So their system is indeed very strong, that's for sure, but people still tend to view it as a retail stock. Now, let's take a look at the economic data. So, let's see. In the real world, the number of people on unemployment benefits is actually going down. Oh, that's pretty interesting. I didn't expect that. Well, the drop isn't that big, but it's still a good sign. Overall, it means the job market is relatively stable. All right, so what's a bit tough is probably the change in expectations for rate cuts, since non-farm payrolls are strong. Did you notice that September was actually strong? But this is just September. Today we're talking about September and October during the government shutdown, so these September numbers are actually from quite a while ago. Also, there's the revision for the past 2 months' wages. As we can see, there's a first month's revision value, and for the previous month, it was revised downward. So, the 3-month moving average has been brought up, which is good news. However, the unemployment rate is trending upward. The labor force participation rate is about the same as before. Wages at 3.8% are a bit high, but still haven't exceeded 4, so I think that's still okay, about the same as the previous period of the 3-year average. The underemployment rate in the eastern US remains at 8.0, which is certainly a good thing as well. As for the jobs report, I think September is quite a while ago, to be honest. It's been a while, but it does show. Overall, you can't really say it's too messy. Other than the non-farm payroll numbers being higher than I expected, actually, the rest of the indicators are still pretty good. This might be why the Fed is holding the FOMC meeting. This is the last jobs report before the Fed's decision, which is very important. In addition, we also need to see if the inflation-related numbers will be released and what the situation is, because the officials probably don't want to just say the job market is bad, you know? If they don't want to cut rates, they'll just keep talking about inflation being too high. So the jobs data already gives us a reference point. Even though it's not the most complete or best number, it still serves as a reference. Next, you'll probably need to look at what the inflation numbers actually look like. Alright, we've pretty much covered the economic data up to this point. Now, let's take a look at everyone's questions. Some of you mentioned the audio issues. I'm really sorry about that. I'm still not that familiar with the settings. Hopefully, I'll be able to troubleshoot better in the future and resolve these issues. You must be talking about Powell, right? You mean firing our Powell, the Fed chair? I think that's it. But honestly, I think everyone knows deep down that even though Trump talks about giving Powell a hard time, it's mostly just talk. He'll probably keep him on until someone new comes in to take over. But the main point, I think, is how to handle the interest rates. I believe Trump is well aware that if you keep threatening him, he just won't budge. He just won't step down without any conditions. So you really have to reach some kind of compromise here before he'll actually let go. As for Ukraine, I honestly feel really sorry for him. I think we really need to think carefully about this. War. There's one thing for sure. As long as the war happens on your own soil, you're bound to be the loser. If the war is happening on someone else's land, well, you might still have a chance to benefit. But the harsh reality is, if the fighting is on your own territory, that's really not a good thing at all. Well, alright, given how rough things have been today, let's stop here. There aren't any new questions left. So we're happy to say that today it looks like the market has stabilized, but I still want to remind everyone, if you want to invest now, AI has stabilized, but you need to pick the stronger ones. For the weaker ones, you need to take action yourself, cut the weak and keep the strong. Of course, don't be too impatient, because there are still some unresolved issues. You might not necessarily see the V-shaped rebound that the market is hoping for. Alright, we'll wrap things up here for today. See you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.